world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Thank you for bearing with us through an amazing stretch, during which my wife and I welcomed our second child into the world, and my new digital bank, called Bella, gears up for launch in the US. I'll tell you more about Bella soon on a dedicated episode. As a result of these life events, we've been publishing a bit less often recently. We have a few great conversations planned in the coming weeks, so stay tuned. Today, we're sharing a never-before-heard conversation recorded earlier this year with Ali Niknam, founder and CEO of bunq. bunq is a fully licensed digital bank based in the Netherlands and available in 30 countries across Europe. Prior to starting bunq, Ali founded TransIP, the largest domain name and web hosting provider in the Netherlands. Ali is the sole investor in bunq, having invested 80 million euros in the company as of this summer. As of July, the bank had 650 million euros of user deposits. In this conversation, Ali and I discussed the economics of digital banking, the decisions bunq has made around economic sustainability and scale, takeaways for the broader digital banking industry, and more. Please note that this discussion was recorded in June, which explains some stats and references. To subscribe to the Rebank newsletter, including insights, essays, and written transcripts of all new episodes, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Ali Niknam. Ali Niknam, welcome to Rebank.
Thank you so much for having me. Really excited.
Yeah, me too. I always enjoy having deep dive conversations with visionary founders, in this case of a digital challenger bank, bunq in the Netherlands. But right before we hit record, you were about to launch into your life story, which sounded like it was going to be really fascinating. So I stopped you so we could capture all this. So can you start again?
Yeah, sure. Thank you. You're too kind, by the way. I'm not used to getting so much compliments. In the Netherlands, people are very, very direct and very, very critical. So, I'm blushing now. So thanks for that. So I was born in Canada, and then we moved to Iran when I was quite young. And then we moved to the Netherlands after several years. And I started coding at the age of 9, and I started investing in stocks when I was about 12 years old. Founded my first company during high school at the age of 16. Founded my first successful company during university at the age of 21. Today, that company is the world's third largest domain name and web hosting provider. Co-founded the largest privately owned data center group in the Netherlands. Wrote a book about entrepreneurship, and then I figured I could contribute even more to this world by changing the perception of what a bank can be by bringing diversity into the financial sector. And so I founded bunq about 8 years ago now. Time flies.
Wow. What a track record. So at Rebank, we cover digital banking quite often, and we've connected with some amazing founders over time. Tom from Monzo, Ricky from Tandem, Ryan King from Chime, Dee from Moneylion, Colin Walsh from Varo. The list goes on, and I guess actually the list grows as more and more consumer fintechs launch debit cards and checking account equivalents, and effectively we retrospectively loop some digital bank founders in that way. And everyone has a different approach, and everyone launched for a different reason, and everyone has a different view about what the future of their company and the future of the industry is likely to look like. So
I mean, I have to start there. I appreciate it's probably an answer that will require a bit of time from you, but you started bunq. What were you trying to achieve?
Yeah, so the start of bunq was basically the height of the financial crisis that we had some years ago, about 9 or 10 years ago. And what I noticed is that, at least here in Europe, people were more concerned about whose fault it was than how to prevent it from happening again. And so, me being an engineer, I didn't really get the feeling that we were concerning ourselves enough about sustainable solutions. So I dove in, and to my perception and to our idea, the core of the financial crisis of about a decade ago is the lack of diversity. I mean, if you walk into any bank in the Netherlands or in Europe for that matter, they're roughly the same type of people, roughly the same products, roughly the same experience, the exact same business model. And so, as we know from nature, every monoculture dies out sooner or later. And so the only way to make that system robust is to add diversity, to add new players that add a fresh perspective of what banking can be, a new player that, in bunq's case, really listens to its users and has technology at its core and has a business model that is completely different from the traditional banks. So I think that that really sets us apart, and that was for us the reason to start, to show that this different world really can exist. It really wasn't particularly because it was my life dream to become a banker. I still don't think it is, but I do think the financial system being such an important pillar in a healthy society, that I do want to contribute and dedicate at least part of my life in improving the stability of that pillar.
So tell us about, I would say, early progress. I suppose it's not early progress because you've been at it for 8 years, but hopefully it's early in the transformation of the retail banking industry. Tell us about how it's gone. What your experience has been with customer acquisition, the way people use bunq, and how you've evolved the product set over time.
Yeah. So you're completely right. It's been 8 years already, so that's ages, but also it's a relatively short time ago because we chose the royal route, so to say. We chose to, before anything else, get a banking permit because of our, ideological convictions. It was really important to have a full banking permit. The issue, of course, being that getting a banking permit takes years and years on one hand, and on the other hand, there hadn't been any other greenfield company getting a banking permit for 35 years. So the first 3 or so years of our existence, this was our sole focus, to convince the regulator to grant us a banking permit. And this was a major success because we became the first in 35 years. And, the processes and the way we went about it have now become the de facto standard in Europe, to the best of my knowledge. So any greenfield company wanting to acquire a banking permit now follows that process, because that process had been lost over the past decade. And then we really sat together and did our utmost best to create a fantastic product, knowing that it wouldn't be perfect, but it would be good enough, and it would highlight how different we were from all the other incumbent banks. And that's about, I guess, 3.5, 4 years ago now. And despite the skepticism, of which there is many, especially in the Netherlands, we succeeded in significantly pushing the needle on what a bank can be. And I think ever since launch, we have become the de facto standard of all of the innovation and all of the new things that at least mainland European banks pursue. Many of our features have been copied. Many of our ideas have been implemented by incumbent banks. So I do think we're really spearheading the innovation towards customer centricity, towards user friendliness. And I think the rest is kind of following us.
Are you public with your metrics, either user numbers or deposits or revenues, things like that?
Yeah, I think so. Anything directly user related, we shy away from. And that's because we really uphold the highest standards when it comes to privacy. But we do share deposit numbers. In fact, so much so that in the latest version of the app that is now in public beta, bunq v3, you can see the deposit number right in your app in the Us tab. And you can also see how that money is invested, which is also one of bunq's unique features. Not many people are aware that when you deposit your money in a bank, they actually invest it. And you, as a bank customer, do not have any transparency in what it's invested in, nor any influence in how banks invested. And to us, that felt very wrong. So at bunq, you can actually choose between several categories and choose a setting that aligns with your preferences. And then based on those preferences of everyone together, we align our investment policy to make sure it's aligned. And so,
what are examples of things you can select?
Yeah, so you can select, for example, you can select to invest in companies or green companies or personal lending or personal mortgages or, stuff like that. And interestingly enough, we see quite a different setup from one user to another. So there are people who, for example, disable personal lending because they think that consumer lending leads to consumer debt and that is not a good idea. There are other people who do not want their money to be handed out to companies, but rather just to mortgages. So they feel they help other people getting a house. So it is quite interesting to see what people's motivations are and how that reflects in their choices. But anyway, I just opened the app, and our latest figure, as per June 1st, is 607.7 million.
Congratulations. That's a huge number.
Thank you. And it's growing very rapidly, actually. So we're generally perceived to be amongst the four biggest neobanks, like together with Revolut, Monzo, and N26. We're slightly smaller because origin from the Netherlands, but we're about the same size.
So I think a core part of this conversation should probably be around just what we've seen in terms of the evolution of the landscape. On one end, there are digital banks raising huge amounts of money at $5 billion plus valuations and serving quote unquote 10 million customers. We could probably dig into what the definition of serving means in that sense. But you guys, I think, have taken a different approach in terms of fundraising and question mark. You can tell us in terms of your approach to scaling.
Given my past and the other successful companies I've founded, I was and I am in the luxurious position that I get to choose. And because the ideological component of bunq has been so important, I've decided to self-fund it so far. The latest publicly known figure is, I believe, 44.9 million euros, which equates to about $50 million. I can promise you that number is a lot higher by now, but this is the latest public number. And the reason for doing so is not so much that there's anything wrong with investors, but to me, it was really, really important that we took our time to create a product that people really love to use instead of rushing it to market and focusing on metrics that, depending on who you ask, some might say are maybe vanity metrics and don't really mean much. So we've indeed taken a very different approach that has allowed us to have a laser focus on our users and what really drives them and what excites them, and has enabled us to then create this wonderful product that they really love to use. I mean, if you look at many of our metrics that I won't disclose, but if you look at many of our metrics, you can see that user engagement is much higher, that people are actually using our product for their day-to-day and that they're really happy with it. And I think our strategy has paid off, and especially now is really paying off. Also because to us, I have a background in tech, and in tech, things move a lot faster. But in such a heavily regulated environment, things just move slower. And so we came prepared to run a marathon at our own pace rather than being tempted to run a sprint and then maybe running out of breath before you reach the finish line.
So I think that is particularly relevant today, given the COVID-induced global recession that we're facing. We've seen all sorts of consumer fintechs seek to shore up funding positions by topping up existing rounds or raising new money. I'm sure I'll confuse some of these numbers, but off the top of my head, I think maybe in 26 announced $150 million or euro fundraising recently. I think Monzo has been reported to be raising an additional maybe 70 million. I think Starling raised 40 million. The way that a lot of these businesses drive revenues is through one, travel. It's through discretionary spend. It's people using it alongside maybe their core account. It's maybe FX revenues. It's interchange to some extent, which is proportionate to spend. And then it's probably some form of either net interest margin or float on deposits, which is a function of the amount of cash that people have sitting in their accounts. And I think people are preparing for the worst. There'd been this kind of, I guess, ongoing conversation over the past number of years that kind of like, can you hit scale before the music stops and funding runs out and VCs stop writing ridiculous checks into these companies? How do you think about where your business is now from an economic sustainability standpoint and the resources at your disposal in terms of getting to where you need to be?
Yeah, so that's a great question and a complex question, because some of the things you mentioned require some, I think, additional information to paint the right picture. So, for example, in mainland Europe, the interest rates are negative. So having float, having deposits, actually doesn't help you build a sustainable bank, build a healthy bank, because it just costs you money. Interchange in Europe is capped on 0.2%. If you take your duties as a bank seriously, if you take your duties to fight money laundering and terrorism financing seriously, and you really spend the resources on it that they require, it is very difficult to actually have a healthy business with just 0.2% margin on transactions. On top of that, I think, and this is one of the things that we noticed at bunq and that frankly surprised me, is that we haven't been able to see a lot of network effect. So traditionally in many tech companies, as soon as you hit a certain scale, your customer acquisition cost and your unit economics improve rapidly. We haven't really seen that in banking yet. And I think that's because the onboarding cost is quite big. We need to validate everyone's identity. And then once a user is on your system, you still continue to bear cost for that user, because you still need to monitor every transaction. You need to redo their KYC to know your customer every once in a while. So, the business model is not like Facebook, as in grow as big as you can, as quickly as you can, let it be a zero-sum game. So once you hit that point, your costs will go down and actually you will become the de facto standard. It doesn't work like that in banking, or at least not as far as we've been able to see. And so at bunq, again, going back to our ideology of adding diversity to this financial sector and doing things differently, our business model has been very simple. We just charge a couple of euros a month in subscription fees. It's not a lot, but it's just enough for us to have a healthy business. And this has been working out really well for us because, for example, despite this corona crisis, our revenues have been growing month over month. We have continued to hire people. we can see interchange revenue is a little bit lower, but so are the cost of that interchange revenue. So the net result isn't affected at all. And I think maybe this is one of the items that we were talking about before on this banking sector being a marathon rather than a sprint. I think now really is the time where you can see, basically who has a healthy business, who has a plan, and who just started and was hoping for the best, which is a strategy as well that sometimes works, of course. And interestingly enough, we can see a lot of people being very interested to participate in bunq, because I think a lot of investors can see that the future is going to be digital and mobile, of course, but can also see that that future will be made up of companies who actually have a business model that makes sense.
Does charging for the account help you get a higher proportion of users that view it as more of a real bank as opposed to a spending card?
Definitely. And in doing so, the requirements of your bank account in turn get a lot higher. Building a card that you can use globally and, getting great exchange rate and stuff like that is by itself complicated enough. Building a fully digital bank that aligns with the wants and needs of local users is way more complicated, especially in Europe, where, in Germany, for example, people tend to use a lot of cash money. In France, people still use checks. The UK is a credit country. The Netherlands is a savings country. And you have all these local differences that you really need to spend time and energy on to get them right.
To what extent are you guys engaged in lending? How important a part of your business is it?
So the deposits we attract, we partly invest in bonds. So that is a form of lending. As of today, we do not do any consumer or business lending yet, partly because we haven't made up our mind whether it's a good idea or not. We only do institutional lending as of now.
What's the best way to build a genuinely economically viable, indeed economically attractive consumer digital bank? Like it's not clear that anyone out there yet has really cracked that. And the easy answer is consumer lending, especially in the US. You have just made clear that you're not sure whether that's the right route, and I totally understand what you're saying. You're trying to do something different. Consumer lending, as important as it is associated with a lot of evils and a lot of pain. What's the best approach?
Well, I think you hit the nail on the head. Traditionally, consumer lending has been one of the main driving factors of income for banks, but this comes at a huge cost. On the one hand, in some cases, not in all, because lending also has its upside and benefits, obviously, but in some cases, personal tragedy, and in many other cases, and I think we are seeing this happen right now as well, all of these loans become non-performing loans or bad debt as soon as the crisis hits. And we, of course, know that crises hit every 10 years or so. So because of these issues, we have been diligently looking at other solutions. And the way we think about it currently is that what bunq really is a great service. We go out of our way to make sure that our users are really happy with the service we provide. We are providing so many great tools that help you save time, help you save money, help you save CO2, carbon emissions, that nobody else is. So for all that value, we think it's fair to charge a couple of euros a month. It's even less than Spotify for something that you use every day, for something that keeps you safe for all the work you do, all your life savings. So basically, these subscription fees, although not that high, it's just $7.99 a month. for us, they really make the difference in having the freedom to not having to do lending, or to choose if and when we do lending, in what form we do so.
If you look around the market, what's your gut feel about where some of the other European and international consumer digital banks are,
Yeah.
and where they're likely to go to solve this unit economics question?
Well, interestingly enough, and this answer might surprise you, but I don't know many of them. bunq is a very creative, internally oriented company. We typically don't look much at our competition. We really focus on our users and try to come up with smart solutions that help make their lives easy. So it's difficult for me to answer your question into detail or into specifics, but generally speaking, unfortunately, I have an advanced age, or more advanced than I'd like to admit. So I've been around the block in these
Advanced by fintech founder standards, maybe.
advanced by fintech
Can't
founder.
imagine it's that
Yeah,
advanced.
yeah, and I feel really old, but you know, having experienced quite a number of crises so far, basically what happens is always the same. So the really shitty companies go down the drain, the okay but not great companies get bought up, and the best companies remain. And I think, although it is an emotional roller coaster to experience a crisis, crises are fundamentally important for progress. Without the dot-com bubble of the year 2000, I'm not sure whether we would have had a Google or a Facebook, because, these companies were the remains amongst the ruins of all the others that were just doing stuff. And the crisis allowed them to grow into what they are today. So, without knowing who will emerge, I think this is going to be a great, great opportunity for the really great companies to move ahead and emerge as winners is maybe not the right word, but emerge as winners after this crisis is over.
You mentioned that you don't consider yourself a banker, and I'm probably in the same boat, despite working in this space. What's your vision? What's your goal for what banking looks like, should look like, and is bunq trying to drive wholesale change in that direction?
Well, that answer is actually quite easy. I want banking to be the same as ketchup. You go to your grocery store and you look at the shelf where they have ketchup. They have 20 different brands, 6 different sizes. You can choose whatever you like. You can have one, you can have multiple. You can go for a cheap brand or a value brand or a tasty brand or an environmentally conscious brand or whatever it is you like. If you sign up for a bank account today in Europe, you really don't have that freedom of choice, except for bunq. So, my goal, my vision is to bring that diversity in the financial sector so that it becomes resilient towards all of these crises that we have, but also in doing so, gives the freedom of choice to users, to people, to consumers, to choose whatever bank they want that suits them best for whatever reason it suits them best.
You mentioned your long career as a long in tech years, career as a tech founder prior to bunq. What has surprised you about the banking space, the financial services space, compared to other experiences that you had? Or I don't know, what expectations were kind of were shaken when you started working on bunq?
That's a great question. So the interesting thing is, before I started in this sector, I think, like almost everyone else, that bankers were evil and, they were only in it for themselves, and they were greedy, and they were looking for bonuses, and that's why everything went south. But actually, that's really not the case. And it is so interesting to see that this sector is populated mainly by people with great intentions, whether it's the politicians or whether it's the regulators or whether it's the incumbent bankers. They typically genuinely want what's best for the consumer. But, and this is a big but, and this is very interesting, the interaction of the system of politics and over-regulation and all of these processes and public perception of what a bank should be kind of makes it into this cocktail where when you speak to any higher ranking banker, all they're worried about is managing risk, managing the regulator, and managing their internal processes. And their customers, everybody knows they're important, but they can't be bothered because they're busy doing these other important things. And that's really not the case in tech. In tech, you just build something people love to use. You become successful because you do so effectively, and people really love to use it, so they start using it, and that's it. But in banking, there's so much other stuff going on that is a constant distraction of what I think should matter most, which is the happiness of your users. That, so many companies, they just lose perspective.
What are you doing to fight that inertia that develops as you guys, a fully licensed bank, work through the daily grind of regulation and compliance? And how do you prevent that from slowing you down or undermining your vision?
Yeah, so it's definitely slowing us down. There's no way getting around it. The law is the law, and we have to abide like everyone else. But I think the more important thing over the longer term is that we do not lose perspective of our users. And the way we're doing that is, first of all, the founder is a maniac, only concerned about his users, so that helps.
Love it.
Second of all, I think we have a very user-centric DNA in this company. So we have 3 pillars when you come in as an employee, and those are: number 1, being user-centric; number 2, being effective in your communications; and number 3, being an effective owner of whatever it is you get your responsibilities on. But one of those 3 pillars, and the first one, is being user-centric. So that's the second way we are trying to keep our focus on what really matters. And then the third way is, within the company, we have so many rituals and processes and that involve and include our users, that although we have a really strong voice in the form of a regulator, we have an equally strong voice in the form of our users. So, for example, every 4 months or so, we present the latest version of the app in something we call a bunq update. And we kind of fill an entire theater here in Amsterdam. It's a beautiful theater. It's right in the center with those, red velvet seats. It's really amazing. And these sell out. So we have 600 users in the room, just being there, being a part of the moment where we launch the latest version of the app and we highlight all the cool things that we have been building for them. And the vibe is amazing. And, it's accumulation of all these things that hopefully will withstand the logical inclination to focus more towards regulation and the regulator than your users.
Yeah. What has your experience been with user testing? There are all these great quotes from history. What is the one that's attributed to Henry? Yeah, that one. And so the Henry Ford one being, if I asked customers what they wanted, they would have asked for a faster horse and not a car. And then like Apple, related lore. I mean, how do you ask a user to invent something that they can't see
Yeah.
and tell you reliably whether or not they would use it. Like how much of the user feedback is genuinely monumental versus, hey, it'd be great if you paid me a higher interest rate,
Yeah.
sort of thing. Those incremental improvements.
Yeah. Yeah, that is a great question, and it is. I can answer how we do it. So we have three main pillars of feedback loops upon which we decide what to do. One is people's opinions, so feedback. Many of it is frankly quite unusable because indeed it boils down to, hey, give me more for less quicker. I mean, that's not feedback. That is, that is unusable. Second of all, and this is a very important one to us, is we look at how people actually use bunq. We look at data because there's this famous saying here, and it's kind of, I don't know if it's politically correct, but we tend to say nobody ever admitted to vote for bunq, yet he became the president. So rather than looking at people's opinions, we measure what they actually do, because this gives us much better insight in what it is they want. And the third category in how we have this feedback loop and invent new stuff is internally by ourselves. We just try stuff out. And then we launch it, and then we see if people use it and how they use it, and then we take it from there, improve it from there. If I go back to user feedback, I think, if you ask someone, what do you want? And they tell you faster horses, then what they're actually telling you is, I want to go from A to B quicker. If you take it too literal, you're setting yourself up for failure, because obviously nobody can breed faster horses, or only marginally. But if you take it the way it's meant, which is, I have an issue, I need to be at location X at half of the time that I'm now, then you enable yourself to build something like a car. And I think that's what we do at bunq as well.
Great point. You guys recently expanded, I believe, to the entirety of Europe after having launched in a few specific countries over the past couple of years, I think. Where in Europe are you guys getting most traction? What are your expectations for the opportunities in specific European markets based on what you've seen?
So we don't rush things at bunq because we want to make sure that things are right. And when we enter a new country, we always do so in two phases. Phase one is general availability, so that enthusiasts and people who are curious can start using bunq and can give us feedback. And then depending on that feedback, we really improve the product to make sure that it adheres to local standards and local preferences and local wishes. And only then we go into phase two, which is we start, investing serious marketing money and really try to get some traction. Our expansion in those 30 countries that you mentioned was mostly phase one. We made sure that all the regulatory and compliance and legal stuff was taken care of. We launched everywhere, and now we're accumulating data and feedback to see where we can get most traction. Now, if you ask me where are we most successful today, then I can say today we have a lot of traction in Germany and the Netherlands, and France is upcoming.
Excellent. Ali, look, great work. It's very, very exciting to see what you guys are doing. We didn't even get time to discuss it today, but I love the sustainability aspect, and I imagine that resonates deeply with an important and growing segment of your customer base. And it's tough not to look around the world right now. We're in the midst of very vocal protests for equality and justice, certainly in the United States and in other parts of the world as well, including many cities in Europe. It's tough not to look at that and that energy and that demand for change and apply it to this traditional industry, banking, and what new companies are doing versus the way that traditional companies have operated, whose interests are being served, and what the future may bring. And it certainly feels like you guys, among a few others, are well positioned to meet the needs of customers now and going forward.
Thank you so much. And I fully agree. And I am so much aligned and welcoming all of the protests that are going on now, because, I think the world today has never been better than before. Today is better than yesterday. Yesterday was better than the day before. And I think the only reason why that is the case is because people stand up and they look around them and they see things that need improvement. And by sheer will and energy, they actually get to improve it. So if we can get past parts of our horrible history once and for all, that would be absolutely amazing. And I look very much forward to that.
Fully agree. Ali Niknam, thank you very much for joining us today.
Thank you.
Thanks for tuning in to Rebank. If you liked today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.